A lot of investors I partner with have one major challenge. They are busy professionals that love to create memories with their families, but are too busy to actively look and find value-add real estate that cash flows. Hey guys, I'm John Fortes, and I want to partner with you. I provide investment opportunities through apartment syndications that allow my partners to invest passively so they don't have to worry about trading more time for money. If you are interested in creating passive streams of income, wealth creation, and all the tax benefits that come along with investing through real estate, I encourage you to fill out the form at www.investwithfortes.com. Invest today so that tomorrow you can trade money for time. Once again, that's www.investwithfortes.com. And I can't wait to partner with you.
Are you a busy professional looking to diversify your portfolio? Ever wanted to passively invest in real estate but don't know where to start? John Fortes provides you with a guide to passively invest in real estate. This is the Passive Investor Show.
And now, the Passive Investor Show. Here's your host, John Fortes.
Hello, PI listeners. Thank you for lending me your time today. Welcome to the Passive Investor Show. I'm John Fortes. Our goal is to provide you, the busy professional, with passive investing tips and tricks for your real estate investments to leverage more time for you to focus on your true passions. Let's get to work. Passive investing is one of the best ways to receive the benefits of owning an apartment complex without the time commitment, finding and funding the entire deal, as well as creating and executing the business plan. Assuming you found the right general partnership and qualified team, compared to other passive investment vehicles such as stocks, bonds, or REITs, apartment syndications cannot be beat. The returns offered to the limited partner, aka the passive investor, vary from general partner to general partner, meaning every GP is different. A limited partner is essentially an equity investor. An equity investor is the most profitable type of investor. So there is two types of limited partners. There's the equity investor and the debt investor. We won't touch on the debt investor in this episode. The equity investor also participates in the upside of the deal. Equity investor will not receive their initial equity investment until the sale of the apartment complex. There are times where you see a portion, if not all of your capital back in the form of a refinance. But for the sake of this podcast, we'll act like there's no refinance coming. Most common ongoing return is called a preferred return, aka in the industry known as the pref. Preferred return ranges from 2% to 12% annually based on the experience of the GP and their team, the factors of the project, and the investment strategy. The less experience and the more risk, the higher returns. The GP will offer the highest percentage for distressed apartments and the lowest percentage for turnkey apartments, with value-add apartments falling somewhere in between. Value-add apartments is mainly the common investment these days in apartments. Here is an example. Highly distressed apartment deal with the GP may vary. Here is an example. A highly distressed apartment deal, the GP may offer 12% preferred return. With a low or no return during the stabilization period, the preferred return will accrue and be paid out to the LP in one lump sum. For turnkey apartments, the preferred return will fall toward the lower end of the range. Since the building is already stabilized and minimal value can be added, there is less risk. For value-add apartments, the typical preferred return that is offered can lay anywhere between 5% to 8%, depending on the market cycle. The common structure these days are the most common structure for apartment value add deals these days is 8% preferred return with a 50-50 LP-GP preferred profit split. The next common is an 8% preferred return with a 70-30 LP to GP profit split until the LP IRR passes a certain threshold, at which that point, the remaining profits are split 50-50, which usually occurs at the sale. PI listeners, I'm grateful for your time and I appreciate you for listening. For more information, go to PassiveInvestorShow.com. If any of this resonates with you, please subscribe and leave a review. The more you know, the more we grow. Thank you for tuning in. Till next time.